Hello. Hi, Ranj. How are you? And how can I help with Canadian investing, personal finance, financial independence, all that good stuff, money management? I can look up stocks for you, make suggestions for investing, personal finance. I'm financially independent, meaning I don't work. Okay, you know me from before. I'm good. Goose is in a bit of a penalty box because I tried to go jogging with her and she just did not want any part of it. So I ended up taking her home and then running the 5K myself. So I'm not her biggest fan right now. Should you keep Nvidia? It's certainly come down in price. It's becoming a little bit more reasonable. It's it's still a good company. I have to be honest, I'm not convinced everything that's coming out of China is the truth, personally. So like all of this stuff might I I don't want to use the word hoax, but um, yeah. Uh, it's a good company. There's always going to be need for microchips, whether it's going to have the stellar growth that's priced in. Last I looked, it was a PE of 50 today, so it's coming down out of the stratosphere. Commander AI 2000 says, "Do you goon?" I have no idea what that means, so feel free to elaborate if you actually want to hear the answer. But yeah, with the whole okay. With all the DeepSeek stuff, that could be just a flash in the pan, and it goes away when people stop believing in it. Yeah, I'm not going to, Commander. There. Um, this is about investing. If I can help you with investing and make some money, even just get you started on the right track. Um, but yeah, I'm not falling for that. Um, I bet it's not. I bet it's not. Okay. So it's not the investing term that or finance term that I would want to be associated with. But anyways, yeah, Nvidia is a good company. Everybody's taking a hit. The only thing kind of in the chip space that I own is Taiwan Semiconductors, and that got beat up. Um, but I mean, I don't own a significant amount of it. I'm more of a value investor, anyways. So, yeah. Nvidia, I mean, if you're a believer, we don't know. There's a ton of stuff. To me, it's really strange that what others are spending billions on, they did with 6 million, which is pocket change in relation. So like they either stole their data or copied something, took a shortcut somewhere, or they're lying about the 6 million, right? So I kind of look at it that way. Sukhjivan says, "How much Qtrade charge for an account?" Um, they for commission for trading commissions, I think if you have under a half a million, it's 875 for a trade, whether mutual fund, ETF, or stock. Because I have over half a mil, it's 695. I think if you have some low balances, I want to say under 20,000, or you need to look that up because I've never had under 20,000 with them. They might charge you like an admin fee or something on an annual basis, maybe for registered accounts or something like that. Um, Political vinyl. Oh, good. We're asking. Do you recommend physical gold as an investment? I'm not a gold fan, period, just because it doesn't have any utility or intrinsic value. Um, just looks shiny and doesn't corrode. That's the main part of it. Um, if I were to buy gold, and by the way, it's not a hedge against inflation either. It's more of a fear gauge when things start getting interesting in the stock market. People sell out of the stock market and they buy gold and they buy bonds, and then the other way when the risk on is coming back. Um, so yeah, I'm not a fan of gold. If I were to invest in gold, it would be an ETF like GLD. Um, I would not hold physical bars. They're hard to store, hide, and then you pay commissions in order to buy them and then to sell them again. While an ETF is you just pay the trading commission. Okay, I'm gonna ignore the Goon Gear here. Is a company that focuses on making sure. Oh, okay. Well, I hope that was fascinating, hilarious. Um, so I'm gonna get rid of you. I've been on TikTok lives for about 4 years, and I've started doing YouTube a few months ago. So like stupid wordplay. Hey, if that's your thing, awesome. Find a channel where people enjoy that. This is, I don't want to say serious, but I mean this can really change somebody's life if they start investing. If somebody who's 18 doesn't know how to start and I help them, like I can actually get them started. Um, so I'm not here for juvenile jokes, frankly. I'm all for it when I'm with a group of friends, people I know. It's all good, but like, anyways, like 5 people dropped off. I hope they were all together. Ryan says, Wealthsimple offered a bond portfolio saying it's more a higher percentage than a high interest savings account. Yeah, it would be. Would be pure interest for capital gain. So with bonds, there will definitely be interest, but bonds move on their own, both with the central banks changing interest rates, but also just with market expectations and so on. So you could actually have both. You could have capital gains if interest rates go down further than expected. That's the key point, because that's already priced in, right? And the bonds would have, if interest rates are going to go down, bonds would have appreciated in price. So that's where you would have had capital um, capital gains on any bonds that you had, but now it's priced in. So now there would have to be some sort of a surprise. There's an expectations of, like today we just had a rate cut in U.S. They're expecting 2 rate cuts through the year. I would expect maybe another one, maybe two in Canada, and that's already priced in because that market sort of believes that. So there's not going to be any change if that happens. But if there's more rate cuts, then you would benefit from that, and you would have a capital gain. But at the same time, it should hopefully be paying the interest payments. Sukhjit says, "How do you feel about STPL?" I don't know what that is. STPL. So BMO Global Consumer Staples, and it's hedged to the Canadian dollar, so you don't get currency fluctuations. I mean, during a recession, staples generally hold up pretty well. They're not cyclical. Um, so if you're afraid of that happening, that there will be a recession, tariffs, or more likely not just tariffs, but if it's an actual trade war, that could quite easily do that and get us into a recession. So in that case, staples would be a possibility, right? Sujit says, so what should I use for option as an alternate to Qtrade? Yeah, Wealthsimple is one if you don't want to pay the commissions. There is some talk of front running where when you put in a trade that you don't get the best price, so you end up getting charged something anyways. Because what they do supposedly, I don't think there's a press release about it. What they do, and I mean, they want to make money, right? So like there's something that happens. What Wealthsimple does is they sell your pending order information to another company who then decides, do we want to, before this batch of orders goes through, do we want to buy before the price changes, right? Depending on whether you put in a buy or sell. So they pay Wealthsimple for that. And then that company's order slides in prior, so you don't get the price you're sort of expecting. To me, it's not a big deal. I could have pressed the button 2 minutes later, an hour later as well, and gotten a totally different price. So that's sort of the rumor about Wealthsimple. Yeah, so I would go with them. Political Vinyl says, where are you based out of? Last 6 months, I moved to Edmonton. Prior to that, I lived in Surrey, British Columbia, just outside of Vancouver. So getting used to the snow and the ice. So Jeet says, your perspective on JXI and NPI. JXI, that sounds familiar. NPI I own. So Global Utilities, but it's an American one. So for Canadians, we have to convert Canadian dollars to US dollars. Yeah, like I'm good with utilities. Like I'm in a value and dividend investor. So stuff that pays a dividend and isn't, hugely volatile, I'm on board with. So you're still going to be in the US 70% by the looks of that ETF. So I'm looking at JXI. And yeah, I'm sure you could, if you're Canadian, you could find a Canadian one just as well. So you don't have to supply US dollars. And Northland Power, yeah, I mean, along with other renewables and even electric utilities, like they've taken a beating. I keep buying them because I think they're a great company, and the world, whether with EVs or data centers or not, we're always going to need more energy just based on increasing populations. So yeah, Northland Power, I'm actively putting more money into. I haven't sold a put recently on them. The one that was supposed to expire January 17th, I got assigned on. So I got more stock for Northland Power. So, but I don't have one for February 21st expiry. Where are we? Thoughts on Celestica. Celestica. Again, as a value investor, I like stuff that's cheap and pays dividends, but it needs to be profitable. So we'll just, I heard the name before, I'm not familiar. Supply chain solutions globally to equipment manufacturers and service providers. Technology solutions, connectivity, and cloud solutions. Cool. So P of 31 for a technology company, that sounds reasonable. They took a beating along with the other chip manufacturers. So I don't know whether there was something that they had with AI, maybe with the cloud. I don't know. But yeah, I mean, at a high level, if you liked them earlier, you should like them even more now. 15 billion market cap. Return on equity 14 is not bad. Decent debt to equity 0.44. Anything under 1 is usually okay. No dividend. I mean, for a tech company, that's sort of okay. When did they? 1994. So they've been around for 30 years. Let's look at their sales. I look for increasing sales and increasing profits, because without increasing profits, your share price doesn't go up without the PE ratio increasing, which you don't want to do. So last 3 years, full years, sales have been increasing, so that's good. Solidly profitable and increasing the whole 4 years. And then just looking at 2024, yeah, also sales increasing. So they're not bad. They're not bad. Like, I'm not. It's like, I prefer, like I said, dividend payers if I can, but they're not bad. They're profitable for what sounds like a tech company. They're not overpriced in terms of PE ratio, and their sales are increasing, sales are organic, while you can sort of fiddle with profits by cutting costs, including R&D, which will cost you in the long term. I mean, in 2024, definitely profitable, not necessarily in an increasing way. Actually, the last 3 quarters have been decreasing, but not drastically. So they were heading upwards until it sounds like they got caught. I'm guessing they got caught up with the whole AI thing. So I'm just going to look at their Morningstar report. It's from 2016, so there's no point in that. Yeah, not bad. It might be an opportunity now. Analysts seem to think 155 is the fair price. So prior to the drop, they were overpriced. Oh, maybe they reported. Maybe that's why the drop. Maybe it wasn't something to do with AI. I don't know. But it looks like they reported today, and the price went up. So maybe it was AI. Okay. Anyway, not bad. Not bad. I don't own it, but not bad. Sujit says, Wealthsimple doesn't offer options on CAD stocks. I know they do options. I use Interactive Brokers for my options, and they are on CAD. Since I'm up to date, let me take a quick look. Any questions about personal finance, stocks? We can look at American, Canadian, financial independence. I don't think anybody's going to want to talk about budgeting, but I'm game if you are. To help my accountant out, and just for my own information, I looked, and I got 159,000 in dividends in 2024. Not bragging, just saying. I don't know if he'll let me do anything with options. I do have a margin account that I created recently. Usually you have to sign up for options separately. Let's see if I can do anything. Yeah, it doesn't look like. I'll do a quick Google. Can I trade options Wealthsimple on CAD? Oh, it says, yeah, okay. So you're right. It says no. Just US. It says US and ETFs. But it sounds like it's US ETFs. So yeah, you're right. The answer is no. If you're an options trader, you generally want to do American because they're more liquid than Canadian ones, like even like compared to big Canadian companies. I sell my puts and calls on stuff that I have, and the options are pretty thinly traded. Rand says, do you have stock trader subscription? I do not. You mentioned before you liked them. I might have said Stock Chase. I don't have Stock Trader for sure. Stock Chase is, I mean, you can get, or they want you to get a paid subscription there, but Stock Chase is actually quite helpful. Even now, they sort of watered it down. But like you can enter your whole portfolio, and then like I get an email every morning, two emails actually. One is anything said on the Business News Network, the Canadian one, or actually even like on CNBC, like I get stuff what Jim Cramer said on my portfolio. So that way I don't act on it. Like I don't sell out of something based on what somebody said, but you get notifications and you get that information in an email. And then if I'm buying a new stock or buying more of an existing stock, you type it in into Stock Chase, and you get you get basically what experts have said, what the price was at the time, and what date they said it. And when I listen to BNN, it is actually transcribed properly. So that's super useful. Or you get another opinion, I guess, basically. Short one, like it's, paragraph. But it's helpful. When they want you to have a paid subscription, they'll take out the top picks or something, and actually I'm more interested in reasons not to own a stock than reasons to own it, right? Because it's stuff that I already own. Rand says, how much is Stock Chase Premium? I don't know. I should be able to see here. Like I just have a free account, and occasionally like it filters stuff out. Like I keep getting emails, and let's see if I can find something. Can you recommend a good US equity dividends ETF? So as a Canadian investor, I try to go for Canadian dividend payers in my non-registered accounts because most of my stuff is in non-registered. And so there's huge tax advantages in getting Canadian dividend payers. So I go for US and foreign stocks. I look for capital appreciation, not so much for dividends, but like that should be fairly easy. Google now. I'm just gonna Google them. Like I don't own whatever. So US equity dividend ETF. If you want it in US dollars, like the first one that came up is iShares Score High Dividend ETF HDV. Let's take a quick look since I'm up to date. HDV. So yeah, on Amex. So that's in the US. It's yielding 3.6%. Yeah, you get the usual suspects: Exxon, Johnson & Johnson, Chevron, Procter & Gamble, Philip Morris, Merck. Coca-Cola isn't much of a dividend payer, but it's definitely increasing its dividend. Pepsi, Altria and Cisco are the 52% of the holdings. Exxon is almost 10%. So there you go. That's one. The management fee is a minuscule 0.08%. They're not, yeah, it's not hugely appreciating. Like annualized over 10 years, it's 7.8% per year total return. So that includes the 3.6% dividend. So you're not getting much appreciation with these huge companies. But so yeah, I mean, I would do your own research if I were you on that. For Canadian dividend payers, I have CDZ, which is Dividend Aristocrats. I've held it for ages. I don't have a huge amount of it, but it pays monthly, which seems to be important to people. I don't care because I have enough different stocks that I'm getting paid something every week. So yeah, CDZ, it's Dividend Aristocrats, Canadian companies that have been increasing their dividends the last 5 years. So that's the closest one to that. And then I have a whole bunch of individual stocks. My portfolio, I post it, I update it kind of middle of each month. So it's on CanadianMoneyTalk.ca. You can take a look along with my net worth if you're interested. Cool. Any other questions? Feel free. I do this on YouTube every 2 weeks, and then the alternate weeks is on TikTok. YouTube is much nicer because there's less people, frankly, so I don't fall behind and feel rushed and stressed out. So I enjoy the YouTube ones better. But yeah, if you have any questions, feel free. I'm up to date. Obviously, the big stories are the DeepSeek, was it? Which I sort of think is, if not entirely fabricated, it's definitely adjusted. Like 6 million sounds like it's way too little to do anything without them stealing something, copying something, if it's even true. So, like any news coming out of China, whether government or companies, you gotta take with a huge grain of salt. So it kind of feels like it could blow over. Like I would give it a good percentage over 50%. Anyway, Ryan says thoughts on Wealthsimple Invest Robo managed accounts. Yeah. Like they do everything for you, including rebalancing, I understand. Like I can run my own portfolio, so obviously I don't take advantage of it and I don't pay a percentage. If you're not interested and you want them to do everything, including just ask you 20 questions and then select the portfolio, like it's fine. And I don't know, I'm sure it's under 0.5%, especially for bigger accounts, and then for smaller accounts, it's the middle accounts that maybe they get charged higher. I've never looked. Like I think everybody can run their own portfolio, but if you're like, yeah, I'm not into it. If it wasn't for Wealthsimple, I'd have a financial advisor at a bank. Then absolutely. But you can do like all-in-ones like VEQT or XEQT or VBAL or VGrow, VVAL. Is VVAL one? Sounds like it should be. VVAL? No. There's ZBAL from BMO. Um, yeah, VGRO is the growth ETF. So you can do it's an all-in-one. They'll rebalance it within that ETF, so you don't have to do anything, and then just keep buying and you're set. Also running it yourself, like take a look at my my TFSA account in my portfolio on CanadianMoneyTalk.ca. I got one ETF that follows the TSX, second ETF that follows the S&P 500, third that follows EFI, which stands for Europe, Australasia, Far East, which is basically developed markets. And then I have fourth one for emerging markets. So I've spliced it geographically. You can do it by sector if you want. There's sample portfolios like my geographical one, but go on Canadian Couch Potato and you can find other ETFs. They're passively managed, so they're low fee, and they will outperform 80% of mutual funds which are actively managed, generally because of the low fees, but also because of stock picking. So you can certainly run it yourself. But if the rebalancing, I mean, once you get past kind of two ETFs, rebalancing becomes kind of difficult, and then you just sort of say, oh, I want to buy more of this, and that's your rebalancing. But yeah, the robo-advisor would do that for you. Rand says, do you think TSX will take a hit with tariffs? Buying opportunity. So if the tariffs actually come in, then yeah, the Canadian economy, if we actually get 25% tariffs, but don't start a tariff war or a trade war, then what will happen is our GDP will grow a little bit slower, probably not into a recession, and it will affect the stock market. But if the Canadian government responds and basically starts slowing things down even further, because the tariffs get paid by the people in the country that's issuing the tariffs, right? Everybody's clear on that. So they buy less. It's expensive. You get inflation, like all sorts of bad things. It's a dumb thing to do, and especially to start it. But my personal feeling is it's just being used for leverage by Trump in whatever negotiations. Whether he hates that Canada exports more to the U.S. than U.S. exports to Canada, the trade imbalance in favor of Canada, or whether he wants us to patrol our border better so we don't get the drugs coming across into the U.S. I don't know, but I think it's just basically saber rattling, and or it's not going to be 25% basically. So I don't think it'll happen in the first place. If it does, TSX will take a hit. Canadian economy will take a hit. Obviously, if it's 5%, much lesser hit than if it's 25, but they'll still be in effect, no doubt. If we respond, then it'll be worse. And if there is actually 25% put on, then and we do the same thing, like that will put us into a recession. So and in that case, yeah, the TSX will react and probably overreact. But the other thing is, because I'm up to date on the questions, which is one reason why I love doing the lives on the YouTube, is trying to time the market is a tough game. Like, you get experts, like you listen to them on CNBC, and they're wrong more often than they're right. just for me, whenever I have money, I put it into the market. ABB, always be buying. Okay. If the market goes down after the fact, I try to buy even more. I have a rule that if the market drops 20% from a recent high, meaning a bear market, I will actually borrow outright to invest because stuff is on sale. But in all honesty, to kind of sit on a bunch of cash, waiting for the tariffs and for negotiations and for stuff like that, and then maybe not much happens. The market takes off before you have a chance to invest. Meaning instead of going down, it stays flat, and then when the good news comes in, it takes off, and you miss out on all of that. And meanwhile, you're getting a couple of percentage points somewhere. Like that stresses me out, and we are terrible market timers, we humans, I mean. So I would, just from experience, I would caution against that. Just if you have the money, put it in 5 years, the odds are very good that the market's going to be higher. In 10 years, it's almost 100% likely that the market's going to be higher. Yeah, Robert, just to turn a phrase, I don't tend to lie very often. No. I don't know what to tell you. I hope you enjoyed typing all of that in. My goodness, hope that was worth it. But if you have an investing question, I'm happy to give it a shot. I'm just I've been investing. When did I start? When I was 23. I had a financial advisor wander into my workplace trying to drum up business, and I signed up with them and got into mutual funds, which didn't do all that well. But and now I'm 51, so I've been investing for more than 25 years. So I've learned some things from experience. Cool. I learned not to buy overpriced stocks, which is why I'm sort of a self-professed value investor. Ethan says, "Hi, Lash. This live is a breath of fresh air compared to the TikTok. It sure is. It's I'm not 20, 30 minutes behind like I'm on TikTok. What percentage do you think the high end of Canadian correction would be?" I mean, if 25% tariffs actually went in and they persisted, and let's say Canada responded, which nobody wins in a tariff war. They should know that, but they just kind of think, oh, this is very unfair, and they'll slap the same tariffs on US goods. Like it just hurts everybody. So if they do actually do that, I wouldn't be surprised if it dropped at least 10%, maybe 15. If in the end the negotiations are that you get 5% tariffs or none, the market's going to drop a couple of percentage points on the 5% and maybe do nothing on, like, some things already priced in some sort of a tariff just because Trump calls it out every chance he gets. But like, to me, that could just be really trying to set up. Isn't that, like, number one, unfair, and number two, terribly easy? It's like, well, I'm just going to threaten you with this, and you need to do what I say, and I can just come up with aces out of my sleeve just by throwing it out there because I'm a big country and so on. Never mind any trade agreements or anything like that. I'll just do whatever I feel like. Never mind the whole Panama Canal and Greenland and 51st state and all that. So yeah, I mean, we're living next to the 500-pound gorilla, unfortunately, or fortunately. I mean, they're definitely our biggest trading partner. We're not US's, but for some individual states we are. So yeah, like if it actually happened, Canada responded, and then it kept going on and on. I would definitely expect some sort of a correction in the TSX. But as I mentioned earlier to Ranj, uh, in all honesty, to call back to Robert's question, I would not sit on a bunch of cash waiting for this because it may never happen. Trump was saying about the tariffs to begin with, first day in office, and then it's like, oh, by I think February 1st was the next one, and then he's like, oh, we're gonna do a study, and so like he's backing off on it. So like it might have been absolutely nothing, but because of who he is, it had to be taken seriously. Um, what was the phrase that came out from actually Republicans, and it was, don't take him seriously, don't take him literally, which I don't even know what that means. If he says something, those words have a specific meaning, so like it's clear what he's saying. He's not speaking in metaphor. I don't think it's like we're going to put a 25% tariff like that, but like if he was a state governor, like nobody would care, but because he's the president of the U.S., it becomes a big deal, and like that's been the number one topic of conversation for any country outside of the U.S. that's going to be hit by that. I think he was originally intending to have a tough stance against China, and then he seemed to have a phone call with Xi Jinping, and now they're buddies. He invited him to his inauguration and everything. And like it's it's politics. Like politicians at the best of times, they lie, or they say stuff that they're hoping to do as if it's definitely going to happen. I have friends like that. Drives me nuts. Um, so politicians do that all the time, and then nothing comes of it. Trump is much worse. Like he's an outright liar and makes stuff up as he wishes, or he's like, oh, people have told me. I'm just like, yeah, that's not data. If you're not making that up entirely, just because some yokel in a behind a barricade said something to you as you were walking by, like that's not, they're not eating the cats and dogs. Anyway, um, so yeah, it's a bit of a like based on that, I would never consider fiddling with my portfolio, just not a thing, right? Because you don't know what will happen, when it will happen, and what interpretation the market will put on it, and what the market will do. So to go out of to and especially like my portfolio, I mentioned this on prior lives. Like I have about 60 different stocks, 20 mutual funds, and ETFs, and I'm not going to, like, on a hunch, like liquidate my whole portfolio, pay a whole bunch in capital gains taxes, and then sit in cash with fingers crossed that the market actually drops. Like that's, I wouldn't do that. Not Ethan, not that you're suggesting that, but like usually when I have spare cash, like I just spare myself the whole thing. Back 20 years ago, I was working in the US virtually, so I would get US dollars coming in even then, and I would try to time the exchange. I'd be like, okay, is the Canadian dollar going to get stronger or weaker? And if I thought it was going to get weaker, I would sit on the last paycheck or invoice money coming in, waiting for the Canadian dollar to get weaker, so I would get a better exchange rate for the US dollars. And then it's like, you know what, it's 50-50, and you're just driving yourself crazy trying to second guess that kind of stuff. And so I stopped doing that. And same thing with the news, because there's always going to be something, and you're always kind of waiting. Okay, I'm going to sit on cash, and one of the guys in the Vancouver mastermind group, he just had a feeling a few years back, and he's slowly been liquidating his portfolio, and he's now a significant portfolio, and he's now I think he's like 30, maybe even 40% in cash, and he's been waiting, right? And he missed out on 20+% years. Like maybe he had he invests in some interesting stuff. He invested in Yellow Pages, where basically their whole value is their contact list, right? And it's pretty much out of date, but the company's still up and running, paying off debts and paying nice cash flow. So he's into stuff like that. So that's not where his cash would be, but maybe he was still getting more than 20% on the portfolio that he has. But just my point is, now he's sort of stuck with it. So now he has to wait, if he doesn't just want to admit being wrong, which is the right thing to do, but we humans don't do that, right? We hate being wrong, so we're going to stick to it until some sort of a correction happens. But the thing is, market went up, and now if it drops, it still didn't drop to where it was originally. By the way, guys, feel free to ask me questions. I'm just filling in dead air. So feel free to ask, but maybe this is interesting, maybe not. So that's why I don't sit in cash, because I know over the long run the market goes up. Timing it perfectly is extremely difficult. Even experts with all the research and all the Bloomberg terminals and so on get it wrong frequently. So as soon as I have the money, I put it in. I generally don't even carry much of an emergency fund, because there's always something to invest the money into. So yeah, that's sort of my approach to it. So my friend in the Vancouver mastermind group, investing mastermind group, he's heavily in cash, and now he's stuck. Now he's waiting. Now, having said that, the S&P 500 is pretty, as far as forward PE, is pretty overpriced. So like there might be a correction in the cards there. But a correction again is 10%, 15%. You'll only get into a bear market once you go 20% down. Ethan was asking about TSX because of the tariffs, obviously. But so there might be an opportunity in the U.S., even just with people taking profits. If you have something run up for, like, the last 5 years, 2020 was over 20%. 2021 was, depending on what you were in. 2022 sucked. Like, my portfolio dropped like high single digits. I don't think it even dropped 10%. But if you were in NASDAQ, you lost 30%. And then 2023 was great, and so was 2024. So to expect another outstanding year in the US after the whole big long run up that they've had, and these very good years back to back, it's a bit of a stretch. So there might be an opportunity in the US. Me personally, I'm buying into emerging markets because of the demographics, but that's sort of been my investing thesis for a while. Just because you have a young population and growing population and people being pulled out of poverty, and yeah, so that's why I invest there. But most of my stuff is in Canadian dividend payers. The emerging markets is primarily in my TFSA, where I put $500 a month. So I'm not really going out on a limb too much. Anyways, I hope that was useful. Any questions, guys? Feel free to ask me anything. At worst I won't answer, but I'm usually pretty open. We can talk personal finance. I can look up a stock or two. I'm financially independent. I haven't worked for 5 years, which has been amazing. My blood pressure's down and all that stuff. So yeah, I'm happy to discuss how I managed financial independence. Was I really disliked my job, and I was very motivated, and the job paid well. So I was very motivated to save and invest a whole bunch. So like I was living on 15%, 15% of my income, and I was investing 85. So you can do it. You can do it. It might not be fun, but depends what you want from life, right? And by the way, I'm just filling dead air. Feel free to ask, but maybe I'm giving you some ideas of what to ask. Yeah, I mean, as far as goal setting and so on, like some people want family trips, and that's where their money goes, and if that's what they enjoy, then yeah, you're not going to retire at 46, but you're getting what you enjoy. I wanted time, and I wanted not to have to go anywhere. In the morning, 5 days a week where I didn't want to go. So now me and Goose, we read until midnight, then sleep till 9. There's a fidelity seminar every weekday morning at 9:30. So if I'm coherent for that, I tune in, catch up on my YouTube viewing, take Goose for a walk. I tried to take her for a run today. She would not have any of it. Would not even walk. I don't know what is wrong with her. I didn't scare her or anything, but I had to pick her up and carry her for a while before she started walking when she realized we were heading back home. I took her home and then went for a run by myself, which was, yeah. And because we left fairly late as it was, I was getting hungry and I was not pleased with my little puppy. Anyways, that's a personal story. Yeah. Okay, folks. I'm not getting much participation. So normally I stay on for 2-3 hours. I've been at it for an hour. If we sort of exhausted everything, I will call it an early night, and I've got Morningstar articles to read, and any last chance? Sorry, any last questions? Last chance. Going once, going twice. All right, so I do this once a week, alternating YouTube and TikTok. Start Wednesday, 7 p.m. Mountain, 6 p.m. Pacific, 9 Eastern. So next one is going to be in a week on TikTok. So in 2 weeks, I'll be back on YouTube. Oh yeah, before I sign off, I know the 6 of you are going to find this fascinating. But so one of the things I want to do is teach about investing in personal finance. Grade 12s, college, university, just young people. And because I moved to Edmonton, like I phoned my closest 3 high schools that have a grade 12, left messages, emailed, nothing. Absolutely nothing. First in December, then they're in the middle of some kind of a strike. Just got absolutely nowhere. Like nobody's even like returning phone calls, returning emails. I started phoning the district of Edmonton. I got a hold of a trustee who pointed me somewhere where I ran into a guy, and so like I thought the teaching staff would realize that like they don't know what they're doing with investing. They shouldn't be teaching it. They're probably teaching about compound interest or something, and like they themselves don't know the difference between a mutual fund and an ETF, and they don't know how to start. But they're, whether selfishly or out of ignorance, they're sticking to their guns. And one guy I got a hold of says, "Yeah, I think we're teaching that in I think he said consumer ed. He said cons. I'm assuming it means consumer ed, consumer education." And he's like, "I'll take your name," but I'm just like, you know what? I'm working really hard for a volunteer position. Like I feel like I should be getting paid. So I'm gonna get an introductory, it sounds like one-on-one Zoom seminar next Tuesday with a junior achievement, which means like it's sort of an after-school thing where I would like I thought they would recognize there's like a complete lack of knowledge out there, but they don't know, right? Like they do what they think is best, and then they don't know what happens 10 years later, 20 years later, that I on TikTok I get people who are in their 40s, and I don't know how to begin. I don't know how to start. Like I know I need to be saving for my retirement, but I have no idea. And I don't want to get a financial advisor because they sound like they rip you off, which depends which one you get and where you go. But so to prevent that, like it's just a little bit of education, and it's actually real, practical, right? Like not like chemistry and biology, like great, but like for majority of people, like they're never going to use that. This is actually practical, and you have somebody who's willing to teach it, who's seen like what a mess it is out there, and it's not happening. Like I've been trying real hard. I absolutely nothing out of colleges at all. Like I've left messages again, emailed, nothing. So I'm just like, I don't get it. So anyway, that's sort of a weird update. Not that you guys asked, but anyways, no questions come out of that. So I will wish everybody a good night. I almost made it to an hour. So yeah, I will do this again on TikTok in a week, and then on YouTube again in 2 weeks. So I just saw more people drop in. Any last minute questions? Financial independence, investing, personal finance. Anybody got any questions? Canadian preferred, but I'll definitely look up U.S. stocks and stuff. I just don't know enough about the U.S. tax system. Cool. Okay. So I'm gonna go watch a movie or two. See you guys later. Bye.